Bitcoin slipped below the $40,000 support on January 22nd, but the bears could not sustain the lower levels. The price has risen above $40,000 again, but some analysts expect the bleeding to continue. Chris Bernesky, partner at crypto venture capital firm Placeholder, said in a post on X, formerly Twitter, that he would not be surprised to see Bitcoin drop to mid to high 20,000 levels before a bottom is made. One of the major reasons for Bitcoin's recent fall has been the massive liquidations in the Grayscale Bitcoin Trust. However, JP Morgan analysts said in a January 25th market report that the bulk of the profit taking in GBTC has happened already, meaning most of the downward pressure on Bitcoin from that channel should be largely behind us. Every bull market has its share of corrections, which helps shake out the weak hands and allow the stronger hands to buy at lower levels.
During a correction, waiting for a support level to be established before buying is generally a good strategy.
What are the important support levels in Bitcoin and altcoins that may hold? Let's analyze the charts of the top 10 cryptocurrencies to find out. The bulls purchased Bitcoin's dip near $37,980 on January 23rd, pushing the price to the 20-day exponential moving average, $41,905 on January 26th. And the BTC USDT pair is likely to face a stiff battle between the bulls and the bears near the moving averages. If the pair ascends the 50-day simple moving average, the next stop could be $44,700. The bulls may again face stiff opposition from the bears at this level. And if the price turns down from the current level of the overhead resistance, the pair may remain range-bound between $44,700 and $37,980 for a while. A slide below the $37,980 could start the downward move to $34,800. And the long tail on Ether's January 25th strategy shows that the bulls are trying to protect the nearby support at 2,168. The ETH USDT pair will attempt to pull back to the downtrend line, which is likely to act as a stiff barrier. If the price turns down from the overhead resistance, it will signal that the sentiment remains negative and traders are selling on rallies. That could enhance the prospects of a drop to $2,100. Buyers are expected to fiercely defend the level. Conversely, a rise above the moving averages will be the first indication that the selling pressure is reducing. But bullish momentum may pick up on a rally above $2,400. BNB has bounced off the strong support at $288, indicating that the bulls are aggressively buying at this level. Again, the 20-day EMA is flattening out and the RSI is near the midpoint, indicating a balance between supply and demand. If the price rises above the 20-day EMA, the BNB USDT pair could rise to the downtrend line. This is the key level to watch out for, because a break above it could drive the pair to 338. Instead, if the price turns down from the 20-day EMA or the downtrend line, it will suggest that the pair may remain inside the descending triangle pattern for a bad few more days. A break below $288 will complete the bearish setup, which has a target objective of $238. The bears pulled Solana below the 61.8% Fibonacci retracement level of $87 on January 22, but could not capitalize on this strength. The bulls have pulled the price toward the moving averages, which are likely to act as a stiff resistance. But if buyers shove the price above the downtrend line, it will suggest that the corrective phase may be over. The SOL USDT pair could first rise to $107 and thereafter attempt a rally to $117. Instead, if the price turns down from the downtrend line, it will signal that the bears hold the edge. Sellers will have to sink the price below $79 to join open the doors for a possible drop to $64. The bulls are trying to arrest XRP's decline at 50 cents, but the weak recovery suggests a lack of demand at higher levels. Both moving averages are sloping down, and the RSI is near the oversold zone, indicating that the bears are in the driver's seat. If the price turns down from the 20-day EMA, sellers will try to tug the price below 50 cents and challenge the next support at 46 cents. On the upside, a rise above the 20-day EMA will be the first sign that the bears are losing their grip. The XRP USDT pair will then try to climb to the downtrend line, where the bulls are likely to face stiff resistance from the bears. Again, Cardano bounced off the support line of the descending channel pattern on January 23rd, and after a brief hesitation, the bulls are trying to extend the relief rally department, and that's how the 20-day EMA on January 26th. Now, in the downsloping 20-day EMA and the RSI in the negative zone indicate that the bears have the upper hand. They will try to halt the rally at the 20-day EMA. If they manage to do that, the 80-day USDT pair may retest the channel support line. If this level gives way, the selling could intensify, and the pair mimic to the next support at 35 cents. If bulls want to prevent the downside, they will have to drive the price above the 20-day EMA. If they do that, the pair is likely to climb to the downtrend line, where the bears are expected to mount a strong defense. Avalanche has started a relief rally, and the bulls have pushed the price above the overhead resistance at $31. The recovery is likely to hit a wall at the 20-day EMA, which is sloping down. If the price turns down sharply from the 20-day EMA, it will suggest that the sentiment remains negative and traders are selling on rallies. The AVAX USDT pair may then retest the low at 27.24. A break below this level could risk a drop to $24. Instead, if bulls drive the price above the 20-day EMA, it will suggest strong demand at lower levels. The pair could then climb to the overhead resistance at $38. Dogecoin has been facing selling at the downtrend line, but the bears have not been able to sink the price below the 7-cent support. And the bulls will again try to defend the 7-cent level with vigor. If the price rebounds off 7 cents, the Doge Cent USDT pair could climb to the downtrend line, and buyers, we have to overcome this barrier to indicate that the correction may be over. The pair could then attempt a rally to the $10.10 to 11 cents resistance zone. And meanwhile, the bears are likely to have other plans. They will try to yank the price below the strong support of 7 cents. If they do that, the pair could feel the move downward to 6. And multiple times, Polkadot completed a head and shoulders pattern with a close below the neckline on January 22nd. The bears tried to start a down move, but the bulls purchased the dip on the January 23rd, and the price recovered to the neckline of the pattern. If the price climbs back above the neckline, it will suggest that lower levels are attracting solid buying by the bulls. The 20-day is likely to act as a generational strong hurdle, but if the bulls overcome it, the DOT USDT pair may pick up momentum and climb to 850. And contrarily, if the price turns down from the neckline or the 20-day EMA, it would suggest that the bears are active at higher levels. Drop below 597 could start the next leg of the downtrend to $4.80. Chainlink has been consolidating inside the $12.85 to $17.32 range for several days, indicating indecision between the buyers and sellers about the next directional move, and it is difficult to predict the direction of the breakout of a range with certainty. Hence, it is better to wait for the breakout to happen before taking directional bets. Until then, traders generally buy the dips to the support and sell near the resistance of the range. The price may dip to $12.85, where buying is likely to pick up. A break above the moving averages will increase the likelihood of a rally to $17.32. This view will be invalidated if the Link USDT pair turns down sharply and plunges below $12.85. That will signal the start of a downward move to $10.50.